Everybody, thank you for tuning in. So I've been having a lot of questions on the YouTube channel, so I'm going to do weekly videos on the questions. It could be finance, funding, finding deals, whatever that may be. So first of all, let me apologise. I've got a webcam which is down below, so I'm sorry for looking up my nose, but this one will get better. So on the one today, I'm going to show you when meeting a joint venture partner or a potential joint venture partner. So this category could come under how to finance a deal. So looking at the screen here, literally when you're meeting a potential partner, it starts off with exactly this blank piece of paper here. And that's what it is. You're just going to meet, make sure you like each other. You want to make sure your goals and visions are on the same page as well. Because nothing worse than trying to work with someone, say 3 months down the line, you don't like how each other work, you don't get on, and you've already fell out before the project's complete. If it's short term, maybe not a major issue, as in buy to sell, buy to flip, exactly the same thing. But if it's long term, ongoing, you want cash flow for the next 5 or 10 years, there wouldn't be nothing worse than partner A and your partner B not getting on. So let's get straight into this. So basically what we've done already, we've found a deal. I'll show you how to do that. We've found a deal, we've stacked it, it works really well. Let's say it comes in at 35% ROI, okay? And that's up on refinance. Okay, that's not a bad deal. There's quite a lot of people that would take that. We've already met a potential joint venture. They've already shown interest and said, yes, I'd like to joint venture with you. We've already gone through the AML checks, so the anti-money laundering checks, the KYC checks, so know your client checks. We've done all that process basically. You've got to do that to make sure that you've got clean money. Because, for example, when you're sourcing deals, if someone pays you a sourcing fee into your client account from their bank A, and say the deal falls out of bed, what you need to do is make sure that you know where that money's come from. So send me a statement from bank A, you send the money back to bank A. Because if they were fraud, basically, they send you, let's say, £5,000 to your client account from bank A, they'll say, oh no, I've changed my mind, can you send the money back? If you haven't checked where the money's come from, and they say, send it me back to this account, please, you might have, the money's come from here, dirty money, into your account, and you sent that up to a totally different bank account. So that means you yourself have cleaned the money. So be very careful of that. So it's understanding your client, make sure you're happy, make sure you know them. Okay, we've got a deal, let's come to site, or show them the documents if they may be abroad. Yes, they want the deal, okay? So literally, we're starting here now. It comes from this blank screen. So my nice face there. So, okay. So that's the blank screen. You sit down, have a coffee, you say, right, okay, this is the deal, these are the numbers, let's have a chat, see what's going to work best. And on this side here, you'll put your company, and over here you will put JV company, okay? This will all be written down, pen and paper, very rough. On the Pegasus side, what do I want? On your potential partner side, what do they want? And over time, what you'll do, you'll be asking these kind of questions. These are very, I'd like to say a bit in depth. A lot of people don't ask the questions, but it comes under heads of terms, as you can see. And it's literally, what do we want from this joint venture? Who's doing what parts? And what if X happens? So very quickly, I'll talk you through this. All I do is a bit of a letter-headed paper, my company address, heads of terms, and this is literally the questions that I ask. Obviously, as you're going along the questions, you might have more, your partner will have more, and you combine all of them. This is basically a template, so you don't miss out a lot of major detail. So, question 1, are you setting up a new limited company? Personally, for me, and speak to your own tax advisor, I think that's better, because you'd have your company A, your partner's company B, you'd have an SPV, special purpose vehicle. If it's long-term hold, all the profits can be split as in shareholders. The profit will go up to the top. So it's easy to share the profit in a tax efficient manner. That's very simple. What are the shares in proportion to the company? Me personally, I like to do everything 50-50. It's clean cut. I'm not into all this overcomplicated structures. You have 10, I have 10, you have 20. One thing I have seen, and again, this is something that a lot of people don't think about, and I think it's very cautious. Let's say it's myself, a business partner. Let's say my co-director in my company as well, and then the joint venture partner. What I've seen, and I've told quite a lot of joint ventures that they weren't aware of, let's say we're doing an equal split. The joint venture partner came to me and gone, what I want to do is be a third. I'm going, right, okay, so I'm 33, my co-director's 33, and you're 33. But you've got to bear in mind, it can happen either way. If my co-director falls out with me and he gets with the new joint venture partner, or most terms, co-directors in one business are already business partners. They already chat, they already get on. And I think that's way too risky, just because me and a co-director now own 66%. We are the minority shareholders. We can get together, in theory, and vote out joint venture C. So you can imagine, yes, let's get all this, let's build this pot, we'll get together and vote you out. I explain that to joint venture partners, and I've had a couple that have gone away with a bit of sour face again. Shit, I didn't realise. But it's all about your ethics, morals, being clean. Don't ever try to rip anybody off. At the end of the day, it's a small world. Social media will rip you a new, let's say, backside, yeah? So be true to yourself, true to your morals, and don't rip anyone off. This is a long-term strategy property. It's not a get rich quick. It will get you rich quicker, but not as in supersonic speed. You've got to keep going. And personally, I only ever want 5 or 6 business partners. I don't want 50 or 60, because that will be an admin nightmare personally. And plus, you can't get an admin in technically to talk to your joint venture partners, because they want to speak to you directly. So just think about that as well. So work with the right people on both terms to make it a win-win. Okay, so number 3 on here, what does each person's roles look like? So for a couple that we've done, and this is probably standard really, so we're on the ground, we know our location, we know what to do. So my job is source the correct property. Well, I've done that because I'm having the meeting. My job is to project manage the build. Well, I've got the build team, I've got the costing, I've already done that. Our joint venture partner is to put the funds in. They might be Stoke-on-Trent based, they might be abroad, Dubai, Hong Kong, Sweden, wherever they may be. So their role wouldn't be able to be, or even be fair for them project managed from afar. So work out your job roles within the joint venture, make sure everyone's clean, write them down, so any arguments in the future go, guys, we were here to help each other out. If I'm ill, I know some of my partners will be on the ground within a couple of days, they have to be. But my primary role was getting the deal, project managing the deal, and getting the job done to refinance. So get that itemised, just so each person knows. And it's always a good thing to do anyway, to be honest with you. Number 4, who is paying for what? So as I said, who's paying for the renovation? Who's paying for a sourcing fee maybe? Who's paying for the purchase price? Same again, who's doing what? Is your joint venture partner funding everything? Are you putting some money up front to get the planning to de-risk the strategy? Is your joint venture partner putting in the money for purchase and you're getting a bridging loan for the development? So all of these things, as you can tell, it's a simple question, but it's a lot of answers. Get them all noted down. Number 5, what happens if the refinance doesn't go to plan? Okay, people don't talk about this. They say, yeah, all money back out. Bullshit. Get it written down just in case. Do you get a down valuation? Do the banks change their mind and say, we're giving you 75, our risk profile now is 65 because of a market crash? What happens if you can only get 50%? So a few ideas is, if your partner has got a tax strategy to leave, let's say £20,000 in the deal, or they're happy to do so, and you've had a down valuation, and for whatever reason you refinance, let's give you an example. So let's say I've got a pub conversion, I put £15,000 in for planning. Our joint venture partner would have put, let's say, £200,000 for the purchase, and the conversion is £300,000. Okay, we've gone to a bridge, got the £300,000. That's all done, finished. We're going to refinance. for whatever reason, they're giving me a down valuation on, let's say, 65%. Yes, that's gone and given me £350,000 back out the deal. But this deal that you or me may have been promising all money back out, and to be honest, I never ever say that because I don't believe there is so, and it depends on your risk profile. But the example is, I've got this 350 back out, I've paid the bridge, and I've got £10,000 left. My joint ventures are to pay the JV back first. That's my risk, that's my strategy, my risk. If I don't get paid for 3 years, then I've taken a risk, right? Okay, but that's just me, that's how I do my joint ventures. So I've got that extra bit back. Let's go back 350. I paid the bridge 330. Let's just say now I've got 20k back. I say, hi, Mr. Joint Venture. I'm sorry, we did understand this might happen. We've got 20,000 extra. That is your money now. You put in X amount for the purchase. I still owe you. But remember, it's we still owe you. It's a company that owes you, not me. The company owes you the excess. What we're going to do is what are you going to do? How are you going to pay him back? These are the questions you need to ask. Mine are, you will get all the cash flow up until you are paid back or you hit your marker. As in, if you're happy to leave 20 grand in, up until you hit 20k, then we'll do an arrangement. I've had partners in the past say, I'm happy to leave that in. Personally, again, I like to be fair. I know what my morals are. I still want to pay them back. What I say is, I don't want you to leave that money in the deal. What we'll do is get the money back up to £20,000. Then we'll split it 3 ways. A third to myself or my company, a third to your company, and a third will pay down your debt, that £20,000. So when everyone's paid back, then I get my payment back. 15, 20 grand on planning, whatever it may have been. As I said, my risk. That's how I do it, okay? So talk about who's going to get paid, when they're going to get paid, and if the money doesn't come back out, how are they going to get paid and what are they happy with, okay? See, simple questions, a lot of answers, okay? Number 6, what is the term of the joint venture? Long term, short term? Are you buying to flipping and closing the company down? Simple question, loads of answers. Number 7, is there a get out clause after 12 months? So basically what we've done here and what you can do is, okay, every 12 months, we have, even in our in-house meeting, we go abroad to have a meeting, whatever it may be. Every 12 months, you have a meeting. Are you happy with the current arrangement? Yes, all going well. No, I've had a family bereavement. I've got problems. I've got issues. You just don't know what people get ill and injured every day without expectation. So remember, sort that out. Every 12 months, have a meeting. Shall we keep going? If not, then what are you going to, no, I'm not happy no more, guys. You really peed me off, Then put in there, well, we put in, you can have whatever you want, but get 3 independent valuations, take an average, and then give the partner that wants out, give them first refusal on the purchase price of their shares. So let's go, example, we have 3 valuations in, 500, 600, 700. That's quite far apart, to be fair, but for this video's sake, the average is 600. Now, we own half, they own half, they're all paid back, so they're all equal, making things simple. There's X amount of value there, depending on the mortgage, etc. Let's just say that's the case, and in our term, we say, okay, we'll give the other party 10% off the average valuation. We get first refusal. If not, then what happens? It goes to market. Okay, so simple, really. Just remember, get these questions ironed out. Okay, that was number 7. Number 8, are you going to sign a third-party act for yourself if you are no longer able to act for yourself? Loose, okay. So basically, that's again, if you, hopefully touch wood, no one does, but in a car crash, get dementia, whatever, if you are no longer able to act for yourself, who is able to act on your behalf? Okay, so number 8, are you going to be signing a third-party act for yourself if you are no longer able to act for yourself? This will be for both or all partners within the company. It's basically, hopefully touch wood, you get an injury, might be dementia, car crash. It's basically if you lose any sound mind or body, and if you're unable to act as a director for the company, who will be taking over your roles and responsibilities? Pardon me. So let's say, for example, you're joint venturing with a male. His wife is a full-time hairdresser. She's got her own business. She doesn't really understand her husband's business. Would you want to be working with or alongside his wife? Maybe not. She might not be able to bring to the party the same situation as him, or vice versa if it's a woman with a guy. And it's the same for myself as well. If I got tomorrow morning and have an injury and I can no longer act as I am doing now, I can no longer project manage, I can no longer keep the company going because I'm no longer here, right? So who takes over my responsibilities? Do I let my partner take over? Will she understand what I do? Personally, she won't understand the project management side. She will understand property and letting side. So you've got to take all that into account, and if you're not happy with one's partner looking after the business, what happens then? Do you sort of revert back to number 7, where it's sort of buyout clause because you can no longer keep up with your responsibilities? These are the questions that a lot of people don't ask. It's the ones that are sort of, oh, I shouldn't be asking that because I'm not going to die. Who bloody hell knows? My dad died at 44. Was that expected? No. So these are the questions you want to get out now, okay? So that was number 8. What's going to happen if you lose sound mind and body whilst you're going through this process, say of renovation or ongoing once it's done? Okay, you can always change a term once it's been done, completed and renting, because there's a lot less headache and a lot less overview. If you've got a letting agency, it's all done and dusted. That might change compared to if something's happened to me and I saw some project managing a bill that can no longer happen. But take all them questions into account. So that was number 8. Number 9, the term of the project and what happens if it goes over. So exactly the same again. If your partner is funding everything, you talk about, we're expecting this to be 12 months, maybe 18, depending on market conditions or any issues we find. Because let's say, for example, the plastered wall here, if we took that off and there's a crack, we've got a major structural problem, they've got to get underpinning, we've got to knock it down, who knows? But that can make that project go even longer, okay? So if you're on a bridge and you've gone, well, I've been told by the builder it's a 9-month build, but it's gone over to 18 months, who's liable? That can't really be a JCT. A lot of people say, get a JCT, get them tied down. But if you are giving them unrealistic timeframes, that won't happen either. So we say, if you've been told a 9-month build, always look to fund, if it's bridging especially, and not all your partner's money, basically try and double that. So if I'm on a 9-month build, I'll always ask for 18 months. Okay, so that's a simple one, really. And number 10, are your joint ventures happy to countersign each other's documents before anything proceeds? So it's same again, if something happens, someone's away on holiday, are you happy up to what level they can sign on your behalf? And this could happen to about, okay, more questions you could be asking is like, what are we going to do about the bank accounts? Obviously, each company will have its own bank account. So on this question might be, yes, John, I'm happy for you to sign anything up to £250. If there's anything over, let's have a mutual agreement. It can happen either way. If there's a bill of £300 for something, I'll say, yes, go ahead. Go to your partner and say, are you happy with this? Yes, let's go ahead. And most times that's how it happens. It's just about keeping each other in the loop. Make sure both know what's going on and keep that going, okay? But most importantly, look at the bottom here. Always remember, create a win-win joint venture solution. If it's long-term, that's just like getting married. Sort of, would you meet your partner after 15 pints, go home and get married? I don't think you would. Maybe some people have, so. But no, seriously, it's a long-term marriage if you're being in this long-term relationship. So just think who you're working with. Is that correct structure? Are you both happy? Have you missed anything? At the end of the day, I always say, you're around a business table, you're having this meeting for a reason. You both like each other now. things do go wrong. Same as a lot of people get married. 10 years time they get divorced. What happens if we get divorced? What's the process of this divorce? Always think about the dark, bad things now. Get them written down. Okay, so and just remember, a joint venture is for life, not just for Christmas. Just remember that. So once all that's been done, you're happy, you drunk your coffee, you're all done. Let's say my situation, my role is to get this all set up. So we've been there, had the meeting. I've reverted back to this document. And from them questions, I will have a lot of stuff written down on here. So I go back to the office, I type all of this up. Same again, heads of term, make sure you got your correct address because that's not mine anymore. But heads of terms, okay, it's between company A, let's say AA, because I double tapped, and company B. And this is, it's the date, the purchase price, work through this, add any things that have been missed out. But this is a template for me. So one, a company has been set up called ABC Limited. It's broken down to company A 50%, company B 50%. And all of these answers will come from your questions. And their funds will be purchased. So whose funds for the purchase? Whose funds for the renovation? It might even be company B shall get a second charge or a restriction on the property. It might be that they get a first charge up until they get the bridging finance, if that's what you're going to do. If they get to fund everything, well, they'll have first charge. It's only fair to do so. But in this one, company B will get second charge. The bridging lender will fund the conversion and they'll get first charge. They'll always want first charge. We shall be looking at a planning for the extensive. So put any small items in there. So if you've got planning, you're going to go ahead. We're also going to do a rear extension. Who's going to be that role? Who's going to be paying for that? Put everything written down. The 6. What's your exit? Yes, it's going to be refinance, paid back. It's going to be a flip, But put down in what order people get paid back. So we've done refinance. We've got an amazing valuation. We pay these guys back first, the bridging lender. Who gets paid second? Well, it'll be the purchase price, which is a joint venture partner. If there's any initial capital from the full investment of X, then 100% of the cash flow and profit goes into the new company for a period of X amount of years. And this is what I was saying. If someone wants to leave 20 grand but 16 grand in the deal, how is that repaid back? If there's any extra, it comes back to, let's say, myself, legal professionals, your planning fees. If there's any extra again, it goes into the new company. It's a split in the way that the shareholder agreement states. It can be split quarterly, yearly, monthly, whatever you agree. So same again, keep going. The monthly cash flow is split in the company as in the shareholder agreement. You can put, let's say, if you've got any stuff with planning, put that in there. Whose role? It's basically all I'm going through now. The questions that I've asked, I'm typing them out so they're clear, okay? There's a break clause I spoke about, and also this is a long-term hold. What are we going to do? Just put your options on there. Are you going to look for, say, a charity who will be looking for a 3 to 5 year lease? Will you be looking for working professionals? Are you going to give this to a corporate let service accommodation? Put everything you want written down, okay? And what you need to do, so when that's done, I type that up. You've got all named, 1 partner, 2 partners, 3, however many partners, add as many as you want. I say, send that to your joint venture partners. Say, if they've got any changes or amendments, can they go under here and type them in red? So, for example, if I went, funded with pitch, yeah, okay, now, that's my change there, because I'm now a joint venture partner. They'll put their change in there, but make sure that they are red. That gets sent back to yourself. It's all paper trail. So anything goes wrong, you can go, no, Luke, you told me that. So we've done that. I've gone, yes, I'm happy with that. What a good idea. I will incorporate this, whatever it may have been, into there. It went in the right order. Okay, so I'll incorporate that into here. And what I'll do, I'll take this off. But if you're not happy, you just do your own colour, let's say a green, under the red, question and queried. It's basically you're making sure both parties fully understand what's going on, fully happy with the process, okay? So once that's gone back and forth a few times, you're both happy. I upload this onto Adobe eSign. There is HelloSign, there's there's loads of things you can use. But then I upload this in. This gets sent out to joint venture partners or partner. They'll date and sign, come back to myself, I'll date and sign. What happens then, I send that off to the solicitor to create a joint venture agreement from my heads of terms. Okay, so that's how we do the joint venture document. So if you've got any questions, please do comment below. If you haven't already subscribed, please do so. I'm going to be doing a lot more of these questions. If you do have a question as well, please put them below. I am making notes of each question, and I will do a video each week on every question. So thank you for tuning in. Any questions or queries, as I said, please do comment. I want to help you as best as I can. Cheers, guys.